Fight or flight? Should Toronto real estate investors sell their investment properties right now? I'm going to be giving you a very, very simple way to kind of determine that. It's a question that I want you to ask yourself to determine whether you need to sell your investment properties right now and deleverage so that you can survive, right? So this is the flight part, not the fight part. Now, a lot of investors are contemplating this right now from the phone calls I'm getting from people I haven't spoken to, or even from maybe some past clients who kind of want to take some chips off the table. And while everyone's risk tolerance is different and their burn rate, meaning how much money that they're burning every month, is different, there's one common thing I see in all of this. And this is exactly why I want to make this video to share with you that this similarity that I am seeing. So make sure you stay tuned. Now, after watching this video or even midway through, and you really want to chat about your personal unique situation and see how you should proceed with your properties, you can book a call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and I run and operate a RE/MAX in the Greater Toronto area, on top of making awesome educational real estate content just like this one for you. And we found any of these videos that I'm making for you helpful in your real estate journey, whether you're buying, selling, or in this case, deleveraging your investment properties, and you're just kind of even generally curious about the real estate market, help me spread the knowledge by smashing the like button and subscribing to the Prime Props channel, because this way, a lot of people understand some of these different perspectives, get different information so that they can make the right decision, because right now it's a very tough time for some investors right now. So the question I'm posing to you is, should you be selling your investment properties to survive right now? So this is applying to the investors, myself included, right? So this is a common question I am personally getting right now when people are booking a call with me. And I would say the short answer, and not to make it sound like a cop-out one, is it depends, right? It really, really does. So let me explain. Everyone's situation is unique, and everyone's risk tolerance, like I was saying in the beginning of the video, is different, right? And their burn rate, meaning the amount of kind of cash that they burn every month to keep this portfolio, varies. But if I had to boil it down to one thing, you should ask yourself this one question. Am I going to lose my primary residence, meaning the home you live in, if you are going to continue holding your investment properties? That's the question. And if you answer yes, and you're at risk of losing the home that you live in, the roof over your head, your home, just so you can hold on to your investment properties, I think it is the wiser to sell your investment properties and deleverage. Now, the analogy I would use for this is it's the same way as you would triage and treat cancer. You have to remove the infected cells in the body to keep the entire body safe. And in our case right now, if your investment property is the cancer and the infected cells of your body, and it could force you to destroy your entire body or your entire portfolio or your body, like my analogy, right? Which includes the home you live in, then yes, you may want to consider cutting your losses and deleveraging so that you can keep your primary residence whole, right? Now, a bonus second question is you should ask yourself, how are you mentally coping with this? No, really, I'm serious. How are you mentally coping with this? If you don't have the stomach to cope with the uncertainty and kind of potentially your primary residence being at risk, cut your losses for sure. Live to fight another day. It's better to survive right now and then to go bankrupt, because you know what? You can find other opportunities to invest should you want to, right? You just don't want to go bankrupt and lose your home. And that's kind of the subjective part where it really depends on your risk tolerance and how you kind of handle tough situations mentally, right? Because it does drag on you. And I've heard this many times. Now here comes the objective part, which people come to me for. The head of Bank of Canada, Tiff Macklem, changed their projections last week when they increased interest rate on when inflation is going to come back down to 2%. Now, what they did was they increased the projection by 6 months. And it originally was from the end of 2024, now it's middle of 2025, which means that rates could stay higher for longer. They may not need to go up, but they can stay this high. Even though we could have potentially peaked at this, rate hiking cycle this last time, it doesn't mean we're coming down anytime soon, despite what you may be hearing, right? Because if you hear all of his pressers, he ain't talking about cutting. Of course, this all could change if we have some massive hard recession where everything blows up and everyone loses a job. That could be a different story, right? But again, that's a tail risk. So if you're calculating your burn rate on your personal situation and you have the mental fortitude and the mental cojones to deal with it, I would stress test your burn rate at the current rates we have right now until the middle of 2025. So we'll call it like another 2 years, right? Then you got to ask yourself about the renewal process, which is likely to happen in 2025 or 2026 for most mortgages, which again, there's still a little bit of ambiguity on right now. But those are the two things you want to stress test yourself on, right? Now, again, not to sound all bearish and stuff or like spook you out, but long term, I personally still think holding real estate makes total sense. And my view on that still hasn't changed. The hard part right now with all of this is rates are being so high that holding is the hard part. Real estate's great. Holding it is hard, right? This is why I'm making this video. Can you financially and mentally hold your real estate to reap the benefits that are clearly going to happen, from at least my calculation, due to absurd population growth and the lack of building that will likely play out in 5+ years, but you just have to survive the interim to the 5+ year duration, right? So I hope this kind of helps you a little bit. And the two questions I posed to you help you make a decision, because I know it's a really tough spot right now. And if you want to talk about your personal unique situation and what options you may have, because maybe you haven't considered some, or you just want to bounce some stuff off me about your personal situation and what the best options are for you and your family, then you can book a call with me using the link that's right here. It's www.chatwithzen.com. Now, I know there are other property owners out there in different positions where, like, let's just say, they have one property, meaning the mortgage that's growing on them, or maybe you're afraid of the renewal is their home, right? Their primary residence, and they're at risk of losing that home completely. And that's like a very, very unfortunate thing, regardless of how you got there, right? So if you want me to make a video on that particular topic and kind of cover some kind of questions to ask yourself on how to navigate this, leave a comment in the section below, and I'm more than happy to kind of oblige to it, since it's kind of like a completely different approach to, selling investment properties, at least in my purview, right? Now, the last little thing I do want to share before I wrap up this video is, anecdotally speaking, last year around this time, so like 365 days ago, we had that 100 basis point rate hike or 1% increase, and the market also completely froze. It just felt like this. The sentiment flipped, just kind of like we're feeling right now. Very, very eerily similar. I had a lot of calls about the trigger rates back then, which wasn't like written as much, and it wasn't as known commodity as it is now, right? But, we knew about it. We were talking to a lot of clients about it, right? Kind of blew over, but whatever, right? And the conversations were very similar to what we're having right now. So fast forward to September of last year, despite all of this, the listing ramping up in the summer, which we had, wasn't enough, and nobody was selling because of negative amortization, and we had no inventory in September because nobody had to sell because the banks were backstopping everything, right? So now it feels the same, but there is a little bit of difference, right? And the scare that's coming from a lot of these people right now is the fact that most of the negative amortizing banks, be it your TD, BMO, CIBC, are now actually sending out letters to their borrowers or emails notifying them of their negative amortization. And while technically you don't have to increase your payment, at least from what I can see of all the letters I've been sent, and just the ones I've read, they're very, very strongly encouraging you, kind of out of fear, to increase your payment, because the banking regulator, OSFI, is telling the banks to fix this negative amortization problem. So it looks to me, at least my perspective, the banks are sending these out to kind of notify people, right? So no, you don't have to increase your payment, but it is changing the sentiment for a lot of the people who have these mortgages in the market, just like last year, because there's this thing that's looming over us, right? So last year was a trigger. Now it's the bank saying, hey, pay up, right? However, the big difference between now and like last year is that we're now 1 year closer to the so-called 2025, 2026 big renewal crisis period, depending on whenever your mortgage comes up, right? So, we don't have as much time on our side as we did last year, obviously, because, 20% of time has passed. So this is why I said, whether you should fight or flight your investment property, really depends on the two questions I posed to you earlier. So if it does affect your primary residence, your home, and or your mental well-being, it does make sense to sell knowing that the probability of rates are staying higher for longer and likely not seeing a cut, at least for some decent amount of time, like 1 year, right? But if you have the capacity to hold on and given out your burn rate is good and you stress test it and you have the mental fortitude to deal with it, then yeah, you know what? You're good. Hold and reap the benefits of the massive housing shortage that we're going to have with the crazy immigration that seems to keep on coming, right? It's the gift that keeps on giving in Canada. Anyways, I hope this gives you an idea of kind of where I stand when kind of some of these situations, because I am seeing it a lot. And it is a very tough decision to make for a lot of people. So that's why I want to put this video out there, right? Because again, there's a lot of pride of ownership on the properties in your portfolio. So while you may want to hold on to them and you understand kind of the long-term benefits of real estate, if you can't do the holding part of it, selling makes sense. Anyways, I hope this helps. Until next time, your move, your future. See ya! Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?